right, let's get a check on gold right now. It's trading at $1,597. Now, my next guest says it could shoot up to $2,500 an ounce. Joining us now, David Morgan, publisher of the Morgan Report. David, I'm so glad you're here. All right, $2,500. Is that because of inflation fears or this whole global currency mess?
Both. It's a global currency mess and inflation fears that are going to start at probably any time. I know there's this deflationary scare currently, and a lot of people are not spending, as you said. But once the velocity of money picks up, and there's no way to really accurately predict that, you'll see higher prices in gold and silver.
Now, the typical commodity bull market, you say, is about 17 years. Where are we in the cycle then?
We're in about 12 years right now, so I think we've got a good 5 years left.
Wow. Now, does that also include silver in this commodities bull market?
Absolutely, although the way I analyze silver, it actually started after gold's bull market started. It started about 2003. But that's not untypical of silver. But even if it's the same duration and counting at the same starting point, we still have another 5 years or so in the silver market, perhaps longer.
Now, I love talking to you about copper because it's an indicator of our global economy right now. Copper prices up over the last 5 days, but you're saying don't buy that. You don't actually think all is well.
I don't. Well, I'm going to let the market tell me. I've always stated that the market's smarter than any of us. If copper were to trade above $4 and start to get a good base there and go up, it would be signaling loud and strongly to anybody paying attention that this global problem is behind us, at least from the commodities perspective, and that things are, up and away. And again, from the commodities perspective, in other words, people might be buying commodities to preserve wealth, right, regardless of what the actual build out is.
So what are you buying right now, or what would you tell people to buy right now? Gold, silver, copper, or all the above?
Just gold and silver. I think that both have been in big downtrends about the last 6 months. They're right at the cusp, each of them, of breaking up through that downtrend line. Both have held their support levels at 1550 on gold, and silver in the low 26 level. It's hit it about 5 times. So right at that point, I'm going to look really good the next time you talk to me, or really bad. But I think we're going to see both gold and silver move to the upside here, and I'm looking for some pretty good moves up by the end of the year.
So you're saying $2,500 on gold over the next 5 to 6 years? That would basically be the end of the commodities bull market, $2,500 then being the top.
Being a minimum, Tracy, that's $2,500 is an $850 price adjustment for inflation that it hit in January 21st, 1980. And that's a minimum because remember in 1980, there weren't nearly the problems in the United States that there are currently. I mean, this is a global debt problem now. So I really think that's a minimum. I mean, I just came back from Hong Kong. Robert McEwen, one of the most notables in the industry, talked about $5,000 gold.
Wow.
So I'm actually on probably the low side, but I would look at that as a minimum target over the next 5 years. As far as a near-term target by the end of the year, I think gold can make it back to $1750.
I think a lot of gold bugs hope you're right, David Morgan, and you generally are. We hope to see you soon, sir.
Thank you, Tracy.